Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about income tax slabs for AY 2026-27, FY 2025-26, a detailed guide to old and new tax regimes. Introduction. Income tax is one of the most important financial obligations for individuals earning income in India. Every year, taxpayers need to understand the applicable tax slabs, exemptions, deductions, and rebates to calculate their tax liability correctly. For assessment year AY 2026 to 27 corresponding to financial year FY 2025 to 26, taxpayers have the option to choose between the old tax regime and the new tax regime, depending on which structure is more beneficial for their financial situation. Tax slab rates vary under the old regime based on the age of the taxpayer, while under the new regime, the slab structure remains the same for all age groups. Understanding these slabs can help individuals plan their investments, deductions, and overall tax strategy more effectively. First, understanding the old tax regime. The old tax regime continues to provide various deductions and exemptions, such as those available under Section 80C, 80D, HRA, Home Loan Interest Benefits, and several other provisions. However, tax rates differ according to the age category of the taxpayer. The old regime is often preferred by individuals who make substantial investments and claim multiple deductions throughout the year. Second, tax slabs for individuals below 60 years. For resident and non-resident individuals below the age of 60 years, the following tax rates apply under the old tax regime. Tax-free income up to rupees 2,50,000 become income up to rupees 2.5 lakh is exempt from income tax. Individuals earning within this limit generally do not have any basic income tax liability. Income from rupees 2,50,001 to rupees 5 lakh. The portion of income falling within this range is taxed at 5%. Income from rupees 5 lakh 1 to rupees 10 lakh. The portion of income between rupees 5 lakh to rupees 10 lakh attracts a tax rate of 20%. Income above rupees 10 lakh, any income exceeding rupees 10 lakh is taxed at the high slab rate of 30%. These slab rates apply only to the income falling within each slab and do not and not to the entire income. Third, tax slabs for senior citizens 60 to 80 years. Senior citizens receive a higher basic exemption limit under the old tax regime. Tax-free income up to rupees 3 lakh income up to rupees 3 lakh remains tax-free for senior citizens. Income from rupees 3 lakh 1 to rupees 5 lakh income within this range is taxed at 5%. Income from rupees 5 lakh 1 to rupees 10 lakh income falling within this slab is taxed at 20%. Income above rupees 10 lakh, any income exceeding rupees 10 lakh attracts a tax rate of 30%. The increased exemption limit provides additional relief to senior citizens compared to taxpayers below 60 years of age. Fourth, tax slabs for super senior citizens 80 years and above. Super senior citizens enjoy the highest basic exemption limit under the old tax regime. Tax-free income up to rupees 5 lakh, income up to rupees 5 lakh is completely exempt from tax. Income from rupees 5 lakh 1 to rupees 10 lakh income in this slab is taxed at 20%. Income above rupees 10 lakh, income exceeding rupees 10 lakh is taxed at 30%. The higher exemption threshold significantly benefits elderly taxpayers with moderate retirement income. New tax regime uniform slabs for all age group. One of the key features of the new tax regime is that tax slabs are identical for all taxpayers irrespective of age. Whether an individual is below 60 years, a senior citizen, or a super senior citizen, the same slab structure applies. Income up to rupees 4 lakhs, no tax is payable on income up to rupees 4 lakh. Income from rupees 4 lakh 1 to rupees 8 lakh, income in this range is taxed at 5%. Income from rupees 8 lakh 1 to rupees 12 lakh, income falling within this slab is taxed at 10%. Income from rupees 12 lakh 1 to rupees 16 lakhs income, the applicable tax rate for this portion of income is 15%. Income from rupees 16 lakh 1 to rupees 20 lakhs income within this range is taxed at 20%. Income from rupees 20 lakh 1 to rupees 24 lakhs, the tax rate applicable is 25%. Income above rupees 24 lakhs, any income exceeding rupees 24 lakhs is taxed at 30%. The new regime offers a greater number of tax slabs with gradually increasing rates, making the tax structure more progressive. 6. Rebate under Section 87A. Taxpayers should also be aware of the rebate provisions under Section 87A subject to prescribed conditions. The rebate can significantly reduce or even eliminate tax liability for eligible taxpayers whose income falls within the specified limits announced by the government. Taxpayers should verify the latest eligibility criteria while filing their returns. 7. Health and Education Cess. Apart from income tax, a health and education cess of 4% is levied on the total income tax amount and surcharge wherever applicable. This cess is mandatory and applies to all taxpayers irrespective of the regime chosen. 8. Surcharge on higher income. Individuals earning income above specified thresholds may also be liable to pay surcharge over and above the normal tax amount. The surcharge rates increase progressively based on total income and are then subject to the additional 4% health and education. Therefore, high income earners should consider surcharge implications while estimating their total tax liability. Ninth, choosing between old and new regimes. The choice between the old and new tax regimes depends largely on an individual's financial profile. The old tax regime may be beneficial for taxpayers who regularly claim deductions through investments, insurance premiums, provident fund contributions, housing loan benefits, medical insurance, and other eligible expenses. On the other hand, the new tax regime may be more suitable for individuals who prefer a simplified tax structure, lower slab rates, and fewer compliance requirements, even if most deductions are not available. A careful comparison of tax liability under both regimes should be carried out before making a financial decision. 10th, key takeaways. The old tax regime provides age-based exemption limits. Individuals below 60 years enjoy exemption up to rupees 2.5 lakhs. Senior citizens receive exemption up to rupees 3 lakhs. For super senior citizens receive exemption up to 5 lakhs. The new tax regime follows a uniform slab structure for all age groups. Tax rates under the new regime range from 0% to 30%. Section 87A rebate may reduce tax liability for eligible taxpayers. Health and education cess of rupees of 4% is applicable on tax and surcharge. Surcharge may apply on higher income levels. Taxpayers should compare both regimes before filing returns. Conclusion: the income tax slabs for AY 2026 to 27 provide taxpayers with flexibility through the continued availability of both the old and new tax regimes. While the old regime awards disciplined investment and tax planning through deductions and exemptions, the new regime offers a simplified structure with lower and more gradual tax rates. Understanding the applicable slab, rebate provisions, cess, and surcharge rules is essential for making informed financial decisions and optimizing tax liability. Careful evaluation of income patterns and eligible deductions can help taxpayers select the regime that best suits their individual needs and long term financial goals. Disclaimer: this article is intended solely for general education and informational purposes based on the tax lab information available for AY 2026 to 27, FY 2025 to 26. Tax laws, rebate provisions, surcharge rates, exemptions, deductions, and government notifications may change from time to time. Tax liability depends on individual circumstances, residential status, income composition, and applicable provisions of the Income Tax Act. Readers are advised to consult the latest government notifications, income tax department guidelines, or a qualified tax professional before making any tax related decisions or filing income tax returns. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.